John, a class action lawsuit has been filed against Intel and CEO Pat Gelsinger by the Construction Labor Pension Trust of Greater St. Louis, a current shareholder of Intel, alleging securities fraud and claiming that Intel concealed issues that led to disappointing quarterly results that were released last week that included that suspension of its dividend and a reduction in its workforce.
Becca, last Thursday, Intel's CEO notified employees that the company plans on cutting 15,000 jobs by the end of this year.
Intel stock still hasn't gone back to where it used to be in the year 2000.
It's not the employees that you're letting go, this 10, 15, 18%. They're not your problem. It's leadership, and it starts at the top, and that's where you need to clean house. Otherwise, Intel's not going to recover from this.
The problem with Intel is they're doing so many things at once. They're trying to be fabless and compete with nvidia in the data center, and then, put on all these new nodes and all that. And now they've taken government money, and they're probably getting a call from Gina, hey, what's going on with my money? And there's a lot going on there. So, it's always been a complicated story, and when there's a liquidity issue or potential liquidity issues, it just gets more complicated.
Intel stock went down 30% after its weak Q2 earnings call and the layoff of 15,000 employees. According to Bloomberg, this is the biggest single day drop since 1982. This layoff is actually part of a $10 billion cost reduction plan announced by Intel to increase efficiency and market competitiveness. So, will this new plan save Intel going forward? In this video, we will review Intel Q2 earnings call and discuss the new cost reduction plan, and also talk about the company's outlook and the worth of the company's stock. So if this is your type of content, please like, subscribe, and comment, and tell us whether you would buy Intel stock. So yeah, let's dive right into it. First, any general thought that you have on what's happening to Intel?
Well, this is why you should subscribe to our channel. We called this about a month ago when we did a video on Intel. We reviewed the financials of the company, and we noticed that this company wasn't a good buy. So if you watched our video, you wouldn't have bought the stock in the first place. But it's not too late. You can still subscribe to our channel and learn so that you don't make those kind of mistakes. The stock is down about 55% year to date. This, and from their last earning, the stock going down about 26 to 30%. This has been the biggest decline in the stock over 40 years. Intel has a lot of issues, and we are going to break them down in this video. And we are going to tell you whether it's a good buy, even for the long term. But again, it's not financial advice. So you should do your own research, but you should hear our take on this.
Yeah, cool. Let's dive into the financials. Let me just share my screen. Okay, so this is the Q2 financial kind of highlight in Intel's presentation. I actually really like Intel for this. Not all companies do presentation, so yes. I really like this one. It makes our life very easy. But basically what you can see here, you have three boxes: revenue, gross margin, and earning per share. And everything is going down basically. Year on year revenue is 1% down. Gross margin is 1.1 percentage points down year on year. And then the earning per share as well is down. The decline is not massive, but everything is down. So that's the story so far, right? So if we continue and then come to the revenue and the operating income or the operating margin, right? So here you should just focus on Q2 2024, which is the last bar, and comparing that to Q2 2023, the first bar. And again, there is a slight decline of like 100 million. It's not much, but still, given Intel's position, that's not something you can afford, because a lot of people are keen, trust in the company at this point. And for the operating income, you see the zero there. I actually double check in their financial statement, and I believe the operating margin, so divided by the revenue, is actually minus 15% in 2024. And the year before it was 7%, like 7-8%. The kind of margin or the loss just doubled, which is not good neither.
Just to put it in perspective, when Intel was doing extremely well, their gross margin were about 68%. And now that margin has come down to 38%. If you compare that to a company like nvidia has a gross margin of 75%, almost double what Intel has now.
I think now you're exaggerating. If you compare that to nvidia, that's like very, very unfair to Intel. I think you will use like AMD or something. I'm not sure what AMD margin is on top of my head, but I'm sure that would be something around like between 40 and 50.
Yeah.
Here we can see like a breakdown of Intel's product and the revenue and the margins. The first category is basically the client computing group, where they make or manufacture things that go into, laptop, desktop, and, things around those lines. And here you can see that, they perform, I would say, quite well, because there is an increase from 6.8 billion to 7.4 billion. And this is basically driven by AI going into PCs, and also their Luna Lake that they've started kind of delivering as well. That's okay-ish for them. That's like okay. And then after that, they have the DCAI. DCAI is actually everything regarding data center and AI stuff. And here the revenue is a little bit down, which is very, very weird. This is AI, right? Like everybody's making money in AI
Right.
now. Like,
So Intel is basically losing money in the AI race.
it doesn't make sense.
Yeah, it doesn't make sense.
And even the margin is down. The margin used to be 15% and now it's like 9%. Everybody's making money. It doesn't just make sense.
Yeah.
And then the last one is everything regarding network and edge computing. And here things are just, I would say, in terms of revenue though, it declined. In terms of margin, it's better because the margin doubled. If we continue, this is the kind of interesting bit, which is the Intel Foundry. If you watch, the previous video, we talk about how Intel split the business into two: Foundry to make chips for companies, basically for the outside world, and also for Intel product. And then the second division is Intel product, making product for Intel basically, and designing product for Intel.
Yeah.
It's just keep getting worse. And
they are losing money. There is a lower demand for the traditional packaging and equipment that they used to sell or they used to manufacture for other companies. Again, because TSMC is way ahead in the nanometer size, some of the chips that they produce, and there is also the competitiveness of the pricing on the TSMC, Samsung, and the other manufacturer side. This is really impacting Intel. And this is something that I actually want to point out that a lot of people are missing in their analysis. Intel took a lot of money from the US government because the US government wants to make the chips at home in the US, and they want to stifle China advancement in the chip war or the semiconductor war, right? For this reason, there are a lot of laws that were passed to prevent certain companies in the US from selling certain chips to China. But you have to remember that most of the electronic is built in China. So if you look at TSMC or even ASML, Broadcom, if you look at their revenue by region, more than 50% of their revenue is generated in China. Exactly. So these laws are not really helping Intel. You have to think about something else as well, where they are building, like all these companies that have taken loan and grants from the US government, actually building functional foundries in the US, because they all went to Arizona, which is in the middle of the desert, to build their foundries. But if you know anything about semiconductor manufacturing, you know that on average, a semiconductor manufacturer needs about 2 million to 4 million gallons of water per day. Arizona is a desert. It doesn't have a lot of water. Nobody's talking about that. I feel like the US government is getting played a little bit here, because this company, some of the CEOs from TSMC have said that they told the US that this was not a good idea, because you have to remember the US is a high cost of living country. And if you employ people here, you create these chips, are they going to compete well in the global market? That's a big question.
Yeah, I think you are absolutely right there regarding the pricing point, right? Because they are basically struggling against everything that's coming from China. And this perfectly takes us to the next point. So all these losses that we are seeing, Intel is planning to solve that by launching $10 billion cost reduction plan. And this is basically targeting their operating expenses starting from reducing their headcount. So basically they are planning to reduce their headcount by 15%. That's a lot of people. That's more than 15,000 people. And most of it is going to be done in 2024. So that's just one part. They are also planning on reducing their marketing and general admin and every cost that's related to SG&A. Also, they are planning to work on their capex. According to them, the capex they can allocate it more efficiently. They are planning to save some money here as well. And finally, they are planning to save money on cost of sales. I'm not sure how they are going to do that, but their goal is basically to save around $10 billion on all these things, which is huge. And in my mind, I'm just thinking that most of these things is going to be coming from the headcount for sure.
Yeah. Another thing that they added is that they are cutting their dividend. So previously they cut their dividend about 65%. Going into the last quarter of the year, they are going to completely cut it to zero. They didn't give a date of when they are going to start issuing dividend again. So dividend investors don't like that. So they sell the stock whenever they hear stuff like that. That is also something. They raise some money through bonds. I think they raised like 3 billion. So this is also increasing their debt level from 7 billion to 11 billion. All this money is going in. But something that Intel is forgetting is that on both sides of the business that the Intel has, there is competition. There is newcomers and better solutions as well. So just to summarize it a little bit, if you look at the, client computing group, data center and AI, segment of the company, there are players like ARM, Samsung, nvidia in the AI space, AMD in the processor, gaming, laptop, all that server space. So there is all of that, all those companies that are competing in that segment. Now the new segment that Intel is trying to develop, which is the foundry business, there are also better competitors there. People who partner with Intel itself to manufacture their own chip, like TSMC, Samsung, and others, ASML. Intel is trying to carry on a load that only the US government is gonna be able to fund. Because to me, this company is just gonna keep losing money because it's not gonna stay competitive in the global market. And I don't want to go to conclusion too early, but it's not really looking good. It's not looking good.
Yeah, I mean, you said most of the things, right? I think the fact that they separated the business into two is a good thing, but as we said in the previous video, it created a lot of problems. And now, those are some of the problems that they have now, in the sense that they need first to kind of internally, they need to sort out the reporting and how the business is really segmented clearly, so that we can see that this thing is making this profit, this thing is making this. That's internally. And then outside, they have two main issues, as you just said, right? First, they are competing against the foundries in China. So the people in China, they are also getting, the companies in China and Taiwan and etc., they're also getting government support.
Exactly.
Just like Intel. But beside that, they have a cheaper labor.
Exactly.
A cheaper labor. So how can we compete against?
That's what makes the whole difference. Because if you think about it, everybody should play this out in their head. Most of the electronic get built in China. So you are telling me Intel is going to produce the chip here, send them to China, build the machines and bring them back to the US? It doesn't make sense, guys. And we all know companies in the US, this is a capitalistic system. They are going to find a way around it, and Intel is going to be the loser here.
So yeah, let's come down to the conclusion again. I mean, we made our conclusion,
yeah, we kind of made it, but to me, in like 1 month ago, I said this: I do not like companies that the government is involved in too much, because it breeds inefficiency. So to me, Intel, even in the long term, I don't see it. Intel is just going to become like one of the legacy car manufacturers like Ford, GM, where there's a lot of government subsidies to keep them alive, but they are on the road, on their last leg, basically.
I mean, I agree with that. I think that's how it's going to be in the future. But there is still an opportunity for Intel to kind of do something about this and become a little bit more profitable. And I'm just thinking now, maybe they have to choose, between the two businesses that they created, they have to choose one. Just splitting their strength on the two businesses is just making them kind of split the little bit of not competitive advantages, but a little bit of resources and strength that they have. So I would just, in my mind, I'm thinking, how to solve this company so that they start having less issues. I would just say maybe sell a part of the company. Sell a part of the company. Maybe
to who?
Part that
Nobody wants to do it.
I don't know. In the previous video, we also discussed how the engineering infrastructure is a little bit outdated because they haven't invested in it. Yeah, they haven't done any innovation because they've been focusing on marketing, and now they are cutting the marketing cost as well.
Right.
So, yeah, Intel is a mess, man.
Yeah. The only way out of this is that, or the only opportunity that might help Intel is, I'm going to say something very dark, but this is the only way I see Intel actually being revived. So be on the lookout. If ever there is a war in over Taiwan, for
Taiwan,
example,
China.
where TSMC gets shut down, then Intel can recoup all of that market opportunity, where customers of TSMC will have to work with Intel because they don't have a choice. But right now, and I don't think that war is ever going to happen. China is not stupid. They don't want a war.
Okay, guys. We've been working very hard on this AI-backed platform that enables individual and professional investors to query 10K, 10Q, and earning call reports. And this platform is set to revolutionize the way you invest in stock, as it is going to enhance your efficiency thanks to the AI that will quickly process and analyze the vast amount of data in these financial reports, and also highlights the trends, enabling you to make a better decision regarding your investment. And as a matter of fact, all the insight you will see in this video was gotten from this platform. So currently the platform is at a beta version, and we are looking for investors to try it for free and provide us with feedback. So if you are interested, please subscribe to our Substack. The link is in the description, and thank you very much.